Hey traders, checking into the stock market today. SPY was flat, but there was certainly a lot of volatility in some subsectors under the hood. We'll check out what they were and what the opportunity was. Couple reminders before we get into it. Going to be doing that live public stream at 9 a.m. Eastern next Tuesday, showing you how we cover the market on the morning. And also going to be keep an eye out for Lori putting out some futures content on August 8th. We've got new mini futures for sectors like the biotech sector. Certainly a lot of volatility there. And that's just more trading instruments that are going to lead to more volatility. She's going to talk about the tax benefits, and we're going to be covering technical analysis of these new futures mini sectors, as long as they are liquid enough, which I assume they will be eventually. So the S&P 500 fairly flat on the day, not much going on. We did break the high of yesterday, but not by much. If we look at SPY, we didn't break the high of yesterday. So that high must have broken pre-market. But that high of 415.68, so just a little daily inside bar. If we're red tomorrow, it'll be a little bit concerning for bulls as far as a short-term top. Oftentimes you'll see a flag confirm in whatever direction. And if there's no follow-through, that can mark a notable shift in momentum. It's almost like the last push for that direction. We see natural gas do that a lot with bear flags that then shift with no follow through. And so keeping an eye out where if we had a red day tomorrow that broke this inside bar bearish, we would call it a bull flag confirming with zero follow through. And we would then be watching the rejection from this weekly resistance. Of course, if we get an inside bar bull break, we will be breaking weekly resistance, and the bulls will keep that short-term control as we head into the CPI numbers Wednesday. Nasdaq stronger today, more clear follow-through. We look at QQQ, and we can see that close up at the high of the day. And again, just a very solid move off the lows as bulls keep complete control. What was notable for me today is the dip buying. It continues. So the low of today was marked by 5-minute oversold conditions, and 15-minute RSI got right down to about 31. And that marked the low of the day, which shows us bulls aggressively buying that dip. And we then bounced, and then set a higher low, lower high. We tightened up, and then bulls broke to successfully defend the low of the day support there. And so we are back up testing the high of the day. So Nasdaq leading for the bulls. Again, look at QQQ divided by SPY. Bulls want to see the Nasdaq leading in relative strength, and it certainly is doing exactly that. And the whole way down, we kept highlighting how the Nasdaq has to be leading. It has to be leading. For me to trust the bulls, the Nasdaq has to be leading. It's doing exactly what the bulls want to see. Once it starts lagging, once it starts pulling back quicker, that has to, we're not going to, in my opinion, we're not going to start weekly consolidation unless we see this chart put in some solid red days, which show us the Nasdaq weakening versus the S&P 500. So just keep that in mind, that the bears had complete control when the Nasdaq was weaker than the S&P 500, and the bulls have had complete control since the Nasdaq has been stronger. Semiconductors, still the daily stair-step pattern, just grinding higher, complete control for the bulls with lots of space for the daily higher low to form. We are heading up towards weekly resistance of 249.12. NVDA is still following through here as well with the stair-step pattern. And at this point, we are up 35% plus from the lows. So keep it simple. Bulls keep complete control in the semiconductor sector as long as we keep setting a higher low every single day. Once we lose it, we'll scout first hourly oversold conditions. We'll look for a daily higher low. When's the last time SPY saw hourly oversold conditions? And the answer is July 26th, which was the day before FOMC. Since then, we haven't even seen enough pullback to get to hourly oversold conditions. So again, it will be notable to me when we see a 15-minute oversold bounce that results in a lower low. That will tell me a shift is underway. Because if we look at the S&P, whether you're looking at the S&P 500 or the Nasdaq, it's going to be the same thing. But 15-minute RSI, look at it where it's bounced the entire time since the FOMC. 30, 33, 30, 30, 30, low 30s, 30, So if we see a bounce that results in the lower low and the 15-minute RSI breaking below 30, we will say that's a shift from what we've been seeing over the last 6 trading days. Tesla's starting to show a bit of relative weakness. Percentage-wise, Tesla most often magnifies what the broader market does. It's more volatile in both directions. The past couple of days, Tesla has been up less than QQQ. That is notable. That, to me, again, it shows bulls tiring. And if we look at Tesla divided by QQQ, we can see that we've closed at the low of the day with this correlation 3 out of the last 4 days. So this, to me, we know Tesla's not going to see much downside if the broader market bulls keep grinding higher. But that, to me, tells me pay attention and keep an eye on Tesla to be a bear play when we see the Nasdaq lose the hourly uptrend. And we would then look for Tesla to pull back more significantly. So it's almost like, okay, pay attention. It's not a signal short Tesla now, because again, if the Nasdaq has a higher low and higher high tomorrow, Tesla's probably going to be green. But it means when our sector or when our market starts to pull back, Tesla is positioned well for bears just in terms of that correlation. So that's something we're going to keep an eye on. And Tesla will just be looking for a weekly higher low to be the result of the next pullback. You've got a downtrend resistance line that's also in play here. Not quite, but you could always tweak that just a wee bit. And again, it's a daily bull flag confirming, and at the moment, there's a lack of follow through. Burning on bears everywhere. XLV is tight. XLV volatility is coming. It's either going to join or stick on Team Bull with a higher high, or it's going to join Team Bear into weekly consolidation with a break of 130.88. So watching that closely, because most often XLV, I see XLF and QQQ go inverse to each other much more often, and XLV is almost always floating in the middle, unable to really pick a side convincingly. And so watching to see if XLV bears can prove anything. XLF, same deal. Have to confirm the daily bull flag if the broader market is going to continue to push higher here. If this inside bar today breaks bear tomorrow with a break of 33.39, that will be a daily lower high being set, and key support will be 33.02 from there. And you can see daily EMA 12 is a key guide in this uptrend as well. And again, one thing that we've mentioned 100 times, but the next time we see all major sectors hit low of the day at the same time, a light's going to flash in our heads because we haven't seen it in a significant amount of time as the market has been this strong. So the volatility today we'll talk about in just a moment, but there were some big movers out there. We'll get to that in a minute. IWM daily inside bar, again, not much going on there. Just sideways consolidation. If the inside bar breaks bear, we look for a daily higher low to try and form compared to 184.22. And growth names had the volatility today. So biotech sector, weekly bull flag confirming, close at the high, significant breakout, increasing bull volume, pretty much an ideal 3 days in a row for the bulls. We could see the daily downtrend confirming with zero follow-through being a red flag for bears. We had relative weakness. That weakness followed through and it broke support and lacked follow-through straight into the bounce. When I say lacking follow-through, if you're whatever time frame you're looking at, if you break a level that is key and the next candle starts consolidation or starts a bull move if you're looking in the other direction, that's a lack of follow-through. And so XBI is squeezing out a bunch of shorts from the last couple of weeks. And it's due to earnings and trial data and merger acquisition murmurings, and they've just got a lot of bull momentum. And at this point, from being monthly, weekly, daily oversold, the biotech sector has been leading this bounce for 3 months now. Extremely impressive. And up 42%, which means LABU is up over 100. A lot more than 100. LABU from the bottom is up 165%. Solar sector is a daily bull flag attempt. Simple statement is if 79.85 support holds, it's a daily bull flag. If that level breaks, it's not a daily bull flag. So aggressive bulls are using that level to play off of for entries, and bulls already in position perhaps are using that level to take some off if that level were to break, because then weekly consolidation would be underway. But green day today, and it's a double bottom essentially with those two levels. So solar sector still holding on strong. So the big mover today for me was watching Coin. Coin had news that that BlackRock is teaming up to offer exposure to crypto through Coin. And so pre-market a short squeeze took place. And look at the dollar volume here, or the amount of shares that are required to push the price. So pre-market, the price runs up 40%, and the amount of shares traded there, it's like 700, 800, 9, a million, 1 million, 4, 2, 6, 3. So 3.75 million shares to take the price up 40%. And then the first 5-minute candle is 5 million shares. And you can see a ton of volume up at those higher levels. So essentially a gap up open for profit taking and for shorts to jump on that opportunity. And of course for bulls to take a bunch of profit. But once that happens, once I see Coin is short squeezing in pre-market, instantly go to look at peers. Look for the laggards, because that's what traders do. A trader's going to look at that, and if they have experience, they're going to say, I'm not chasing that. You know, if they're not stocking Coin here and they look and it's up 20% pre-market, they're not chasing it, but they're looking at other names. So whether it's the crypto miners, MARA or Riot, whether it's BKKT, and shout out to John's charts in the chat room, reminding me about that ticker. I completely forgot about BKKT and then traded it on the morning. And it was the first trade I took today was, I'm just looking at what time, 9:30:24. So 24 seconds into the day, I grabbed that position and then was just patiently watching, and it ended up going plus 10% from there. So nice win to start the day, and that was completely based on the laggard move. And this happens all the time. Get used to this laggard scouting plays. It happens in crypto. It happens in MJ. Whenever there's hype and euphoria and one name runs, traders look for the other names. So it ended up being opportunity in both directions because bears had great opportunity as well. The move did not last. And that's why when I say, when I give a heads up of names that we're watching, I don't say, we're looking bullish, these names today. There was bull opportunity and there was bear opportunity. So what I say is, we've got volatility coming, which leaves the door open that we can definitely look in both directions. And I'm looking for my morning post. So crypto names in the volatility spotlight today. And so that just means watch in both directions because they're going to be moving more than normal. So BKKT, we get from the open in 20 minutes, 25 minutes, we've got a 14% move up. And then in 40 minutes, we got a 12% move down. MARA, very similar. This falling wedge, I played this falling wedge, but it never broke with any follow through. So just a tiny little uneventful win, but up 11%. And by the end of the day, down 11%. And Riot, same thing, roughly similar. So again, if there's news for a name and it leads to a short squeeze, scout peers for laggard action. TLRY tested resistance today. So finally broke $4 resistance, which was a wall that bears had been defending for the last couple of days. And so I just had to stop by. I was in a meeting with Lori and Jason and had a stop by set for $4. So triggered in at 401. And then we get nice 3% follow through. But right behind $4 resistance is the resistance level that we're watching. And bears were certainly watching it as well because we double topped and rejected from 416. So bulls still in control of the short term here. CGC has earnings tomorrow pre-market, which is going to have some impact. But this is the level to try and see the first 2-day uptrend in over 6 months for the sector. And TLRY was clearly standing out today as a bull, as CGC with earnings tomorrow was much weaker, and even Cron started to pull back a little bit. It had some continuation there. So keep an eye on this sector, because again, if we continue to see broader market strength, we're just going to look for it to act as a laggard. And that's essentially what Coin did. Coin, not much going on, and then just a little quick short squeeze. Kathy Woods selling the bottom, unfortunately, but short squeezes on watch in laggard names. Only if the broader market stays strong. Biotech sector, the hourly uptrend is going to be our guide. Back burners on watch for the biotech sector. So we're going to look for next 5-minute oversold conditions to mark an hourly higher low. And again, you look at it, I wasn't trading a good part of today, but you look at it and say, oh, gap up, I missed it. But you can play off support. When it's very low risk, you can play off support. Held support by 10 cents and then 8 cents. Obviously, you're not going to nail the bottom, but if you're risking 20-some cents and the reward is over $2, that is very significant risk to reward. You can stop out 8 times and it's still worth it the 2 times that it works. So that's something that a lot of traders struggle with, feeling they missed the move and not wanting to jump in. But just utilize support, because if support holds, the bulls keep their control and we are going to head higher. So it's just a simple statement. If we keep these higher lows going, we are going to go higher. We have to lose the higher lows for bulls to lose the momentum. So that's something to practice, where you can miss a move, but if it gives you a nice, clear, low-risk level to play off of, there are often second-chance opportunities. Congrats to the biotech sector bulls. The dollar set a daily lower high. We're going to continue to watch this daily downtrend as our guide. We know a daily uptrend is needed for a weekly higher low to be set. So it's possible to shape up from here, but we know if 106.82 does not break, then the bears have control of the daily time frame. And with that dollar daily lower high, we've got the metals setting these higher lows. Gold continuation, creating that space. Weekly EMA 12 is here, which we rejected from last time, but we're creating that space for a weekly higher low to try and form next time we top out. So metal bulls are loving the follow through from that daily trend change. And again, a lot of people think, oh, well, if I wait for the trend change to confirm, I've already missed so much of the move. And many times, yes, that's the case. I personally prefer to try and enter on the higher low or the lower high before the trend change confirms. But there are plenty of instances where if it's a longer term move, that the trend change sees follow through. And certainly the biotech sector would be a good example. But silver, not as strong. Have to see silver join. Silver's got to break 2051 to confirm its daily bull flag. We know we want to see silver leading for that risk on mindset. Weekly EMA 12 resistance here as well. So if silver cannot get over 2051, that tells me gold bulls probably aren't going to go much further. Have to see silver catch up as well for this move to continue. Miners on watch to be laggards here. If miners break 2694, then we have the first confirmed daily uptrend in a very long time. NEM confirmed a daily bear flag with 0 follow through. NEM bulls must get over 4694 resistance. This is one of the weakest miners out there, especially after the earnings flush, after already being crushed. So just something to keep an eye on. If the weakest miner, if one of the weakest miners can confirm a bear flag with 0 follow through and then break resistance, that's going to bode well for the whole sector. Oil bears. So as soon as you broke that 92.42 level, right back to fresh lows, weekly bear flag confirming. This is notable for me. Monthly EMA 12 is very notable for the long-term structure of this chart. I think the oil top is in for a while, at least months. If we lose monthly EMA 12, if you hold monthly EMA 12, you can make an argument that, we can still head up and break to higher highs. But if you lose that monthly EMA 12, that retracement is then significant enough that we're looking for that monthly lower high next bounce. And again, that's part of the reason why, in my opinion, CPI numbers are likely, my very unexpert commodities and inflation opinion, is that I'm looking for a lower CPI number next week. But oil is topped. And we are now down. Again, I just look at, what would be needed for oil to head back to the higher high from here. And we need 35% at this point. So it's just a question of how much retracement are we going to see before we find a bottom, and we are already over 50% retracement from our last higher low. Energy sector, weekly lower high is looking like it's shaping up. Big 2-day drop. Certainly a lead bear sector because of the oil weakness, and I took my eye off of it, unfortunately. And so what we're seeing is, again, growth. It's not a coincidence that the biotech sector is shooting up. And look at ARC and growth. Remember how we were looking for growth to start a monthly bounce and energy to start monthly consolidation? They're inverse to each other a good bit. Not a tick-for-tick basis, but generally speaking, energy and growth have been inverse to each other for a while. And we're seeing that continue now with a solid few bull days for growth and weakness in energy. Keep an eye on that relationship between the two. Natural gas double top with the high of yesterday into 4-hour consolidation. Can the bulls confirm the 4-hour uptrend for the first time since this daily consolidation started? 8.586 is that double top high. So burden is still on bulls, because if we can't confirm a 4-hour trend change, that's going to be a very quick daily lower high being set here. All right, hope you had a good day. Trading opportunity picking up a bit with this volatility. And again, in my opinion, a lot of it has to do with confidence being gained in the market overall, and just seeing people a little bit more liberal with their money they're throwing around. All right, one day at a time. Bulls still have complete control. Watch to see what oversold conditions lead to in terms of bounce strength for the broader market. When short-term oversold bounces start resulting in lower lows, we know the market environment is shifting. If all major sectors hit low of the day at the same time, we know the market environment is shifting. If neither of those things happen, bulls keep complete control. All right. Do good things. Thanks for tuning in. A couple reminders that I should have said a long time ago, but I'll put it at the front of the video.
That's some amaranth, which is an edible grain. I think it's a grain, yeah. Got the fan pumping for airflow. I've got onions and garlic and stuff in there. Potatoes are curing. I'm gonna dig up these. And these are all the extras. This is just the compost pile. But all the extras that I had nowhere to stick them in the garden. Yep. They can have it. I might just leave these. Let the compost creatures eat it. There's some solid ones.